Hey everybody, Steven Sitkowski here. Welcome to this edition of Market Insights. Share my screen. We'll get to it. Hope you had a great weekend, whatever that meant for you. A little time to chill, perhaps. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. What's moving the market? Well, you got the busiest week, third quarter earnings going on this week. Definitely could be a market mover, either to the upside or downside. We've got 5 of the Magnificent 7 reporting this week. So they could definitely have some influence on what the market does. Israel spared Iran's oil facilities. As a result, oil prices have come down. We're expecting that maybe they'd hit some of those refineries and it would drive oil prices up. That is not what happened. Goldman Sachs says today is the best day of the quarter to buy and one of the best days of the year. For whatever reason, October 28th will give you the best rate of return for the balance of the year. 10-year Treasury is up 4.258. Generally, that's not good for the market, but the reason it's up is due to earnings surprises to the upside, or excuse me, economic surprises to the upside. So kind of forestalling the whole notion of a recession. And oil prices, they dropped to $67.64 a barrel. If anybody want to start taking positions on energy companies, couldn't say that I would blame you. What to watch this week? Nothing today. Tomorrow we've got the consumer confidence number coming out and the JOLTS report, job openings. So both of those are significant, so be watching for them. ADP employment number, how many jobs did we create? We got GDP coming out. I mean, this is a busy news week. So those will definitely have an influence on the market and on the Fed. And then on Thursday, personal income, personal spending, PCE index, which is the Fed's favorite measure for inflation. We're expecting PCE to be down to 2.1%. Core PCE is still a little elevated at 2.6, but we're getting close to that 2% target. We have initial jobless claims that'll be coming out on Thursday. Chicago PMI is coming out on Thursday. And on Friday, the unemployment report, also the unemployment rate, supposed to stay steady at 4.1%, and our ISM manufacturing number. So a very busy news week. This is last week's heat map. Big winner was Tesla on the backs of their earnings beat. Awesome for them. Other than that, it's kind of a mixed bag. I see a little more bright red than I do bright green. 1-year heat map, it's green all over. NVIDIA up 251%, leading the pack. Market breadth for the week, we always like to look at the companies hitting new 52-week highs versus 52-week lows on the New York Stock Exchange. That was 290 versus 81. That's fantastic. On the NASDAQ, 320 compared to 245. Very solid. And the winners last week, Tesla by a mile. So Tesla, Molina Healthcare, Tapestry, Digital Realty Trust, Lamb Weston Holdings, Philip Morris International, GE Vernova, CBRE Group, ResMed, and Lamb Research. Actually, a single trade I did on Lamb Research paid for my man cave some years ago. And then I left it behind, had a different house built. Good omen, the S&P 500 action after ending October with a 6-month trailing return above 10%, which we have this year. So you can look at the last several times all the way back to 1950 when that has happened. And we've had the markets go up in November and December every time. S&P trades above 200-day moving average. We are now at, I think, 277 consecutive days. It's been an unbelievable run. 6 stocks dominate the market cap. They've gone from 1.1 to 15 trillion. This is Apple, Amazon, Alphabet, Meta, Microsoft, and NVIDIA. Hope you had all of those at some point in your portfolio. They're still appropriate right now. What a run. If you put $100 in the S&P 500 in 2009, reinvested the dividends, that $100 today is worth $852 for a return of 753%. Incredible. Investors are bailing on bonds for good reason. There's been so much money made in stocks. Why in the world do you want to tie money up at 4 and 5%? Soft landing expectations, they just go higher and higher. Market sentiment has come down a little bit. I don't know what people are looking at. We're back down kind of to averages. Historical norms are, when you ask independent investors, what do you think the market's going to do for the next 6 months? Usually 37.5% are bullish. Right now we're at 37.7, 31% bearish. We're at about 30% bearish. How one could look at the facts and not be bullish is beyond me. Lots of earnings announcement. So after the bell today, we've got Ford. Tomorrow, before the bell, we've got McDonald's. After the bell, Alphabet, Visa. What do we got on Wednesday? Before the bell, Lilly. After the bell, Microsoft, Meta, Amgen. Before the bell, we've got MasterCard, Merck. After the bell, Intel, Apple, kind of a big deal, Amazon. And then on Friday, a couple energy, ExxonMobil, Chevron leading the way. How much the Fed's going to cut rates? There's been a fairly significant increase in our probability of a 25 basis point cut on November the 7th. We're up to 98.3%. Last week, I think we're in the low 90s. Now we're approaching 100%. 1-year sector return. So the S&P 500 is up almost 42% for the last 12 months. And the 3 sectors that have beaten: communications, financials, and technology. The big lagger has been energy. And notice that the conservative, staples, healthcare, are down toward the bottom. Covered earnings. Take a look at the charts. Charts ought to be in pretty good shape. So let's add a 50-day moving average to this. I hit the add button. Let's try that again. Yeah, there you go. So clearly, very solid, bullish market. If you look at this 50-day line, it is still sloping up nicely, and we are well above it. Both of those are bullish indicators. How about on the Qs? Great shape there. We were at an all-time high, and we probably we'll see how we finish up today, but we'd hit an all-time high intraday. And how about the Russell 2000? Bouncing off of its 50-day and moving higher, having a good day so far today. Look at how it has obeyed that 50-day right here and right there. Awesome. So, of course, we've got the election that looms in 8 days. I think it's anybody's ball game. I don't think anybody at this point can say definitively who's going to win. So there seems to be a little shift in trend, but we'll have to wait. Ultimately, we'll know. Probably not on Tuesday. I'm guessing it'll be at least another day or two after before all the final votes have been tallied. And that could have a impact on a lot of things, depending on who goes into office, both good and bad. Anyway, I hope you have a splendid week. I will be back with you next week. Until then, be safe, be blessed. Bye for now.